Hello everyone! Today for my project I decided to pick Defined Benefits Plan. The Defined Benefit Plan is a retirement plan that pays an income to an employee post-retirement. This amount is determined by the number of years that the employee has worked at the establishment, age, and final average of wages. So how this is calculated is that a retirement plan formula specifies annual retirement benefits as a percentage of the final average salary. For example, let's say I have worked at Amazon for 35 years and I'm retiring at the age of 59, and my average salary was $52,500. To find my annual benefit amount, I would have to multiply my average salary of $52,500 by the percentage of the final average salary, which is 68.20. And when you multiply that 52,500 by 68.20, you get $35,805. A timely topic. This is a timely topic because it helps solve financial problems that their employee could have when they retire. Once the employee retires, they no longer have a steady income like how they used to. So this allows the employee to receive an X amount of income monthly or a set lump sum payout once they retire. Recruitment and retain top talents. This benefit helps to recruit and retain top talents because it guarantees them that the longer they stay at the company, the higher their retirement annual income will be. Securing many employees to stay until they choose to retire allows the company to have a lower chance of employees quitting, and it also gives employees motives to stay employed in the company longer to increase the amount they would end up getting before they retire. The cost implications of a defined benefit plan are that the cost of maintaining the plan is dependent on higher participation contribution rates, a lower total number of investment options, and the use of automatic enrollment. Another implication is that the employer pays the administrative costs for the plan. The value of the defined benefit plan is longevity pooling and enhanced investment returns that derive from reduced expenses and professional management of assets. Compliance legal issues that need to be understood for defined benefit plans are minimum funding, inadequate or no fidelity bond, vesting or benefit accruals, prohibited transactions, participation coverage, discrimination of benefits, deductions, required distributions, and joint and survivor annuity. Minimum funding. Internal Revenue Code Section 412. Failing to receive contributions necessary to satisfy this code, the main cause of this was that not eligible employees were being included in the plan, which led to improper funding calculations. Inadequate or no fidelity bond plans are required to have a fidelity bond equal to at least 10% of the most current handled assets. DOL Regs.2580.412-11. Vesting or benefits accrual. Internal Revenue Code 411. Every plan is required to have provisions regarding how participations are vested in their benefits. If employers do not keep track, the vesting percentage becomes incorrect. Prohibited transactions. IRC 4975A. Loans being made out of plans that do not provide for them. Participation coverage. Plans are failing to meet their testing requirements of Section 410B due to them not meeting participation entry requirements. Discrimination of contributions benefits. The required amount that was supposed to be paid to the retiring participant is not getting paid to them. Deductions. Contributions are not being made timely. Required distributions. Internal Revenue Code Section 401A(9). Due to administrators relying on participants to apply for benefits, causes issues like the minimum distribution requirements not being met. Joint and survivor annuity. Internal Revenue Code Section 417 spousal consent, QJ&S applications, joint and survivor annuity adjustment, when the non-spouse beneficiary is more than 10 years younger than the employee. Communicating info to employees. Employers should consider using annual pension statements, annual plan members meetings, website updates, mailings, information pamphlets, and social media. These can be great ways to communicate information about defined benefit plans to their employees. And here are the references that I used. Thank you for listening to my presentation.